All right, guys.
What do we got today?
We are talking about crypto proxy exposure. Hoping to make this one a little bit more actionable. Going to take a look at some of the ways that you can gain exposure to the price of Bitcoin, directional exposure via
Crypto proxy exposure.
Yes.
Okay.
Yeah.
Interesting.
I'll break down what I mean by that in a second. But before we do that, let's just take a quick look at what's going on in the market. And still, nothing has really changed. I think this environment is one in which, as the dollar strengthens and there's the expectation that rates continue to move higher here, it's it's a little bit of a headwind for something like crypto, which I think arguably benefits from a different kind of monetary policy environment for sure. But you still have Bitcoin market dominance at 50%. That's been the trade. We look at this on a relative basis. It's Bitcoin over everything. That's been the theme really for the last couple of months here throughout the summer. We saw post some SEC news. We've seen a rally here and there, but for most of these alts, they've been slammed back down. And on a relative basis, Bitcoin continues to outperform. Vol, like it is in a lot of places, is still fairly low here. We have an IV rank of 8, implied vol of 41%. The high in there is closer to 80. So we're certainly towards that 0, but you can expect about a 1,500 point move here on a weekly basis if you look at the one standard deviation. But I think the thing that I've keyed in on mostly has just been that really strong inverse correlation to the dollar. That hasn't gone away, and we continue to see that dollar rally when you look at DXY or UUP for the dollar index.
Yeah, it's funny, I don't look at digital assets, I don't look at crypto as having a relationship to the dollar, really. Like, I just don't think about that.
Yeah.
I'm sure it does, I don't know if I don't really think about it.
That's the way that I kind of look at it. I come at it from more of this kind of macro perspective, and probably the same thing that you see or would imagine you'd see with a lot of the high beta tech or small caps that tend to do a lot better in an environment where, let's say, the Fed is buying 120 billion in assets per month. You're seeing the exact opposite here. And as we get those interest rate expectations moving higher, it still continues to be a headwind. But it hasn't moved that much lower. It's just kind of been a bit of a ceiling on crypto prices. So we'll see if there's still a washout. Ultimately, I think you'll see, as we tend to, right, when volatility increases in risk assets, this stuff all becomes pretty correlated. So I think if you do see a significant sell-off in the S&P, certainly shouldn't surprise anybody if Bitcoin trades lower on that. But all that said, I want to now jump into some of the ways that we can get crypto proxy exposure. As I'm sure everybody's aware, there's not a lot of ways to trade options on Bitcoin. You have the futures market, you have futures options there, but beyond that, you don't really have any Bitcoin options or Ethereum options. So I want to look at some proxies that do have options. Some are a little bit more liquid than others, but to define what I mean by crypto proxy, we're talking about instruments that are highly correlated. I typically will look at a 90-day rolling correlation here, and this can potentially provide an alternative way to get exposure to crypto price action on both the upside and the downside. And for anybody that might be bearish on Bitcoin or other crypto assets, this is a way that you can put on that short position, whereas a lot of times it's hard to short the spot price. And so when we think about what those crypto proxy exposures actually are, what do we mean by that? I'm talking about crypto companies. There's not a lot of publicly traded crypto companies, the biggest though being Coinbase. We're talking about Bitcoin miners that are publicly traded, and then those crypto related ETFs, whether that's something like the futures ETF or an ETF that just has a bunch of crypto companies in it. We'll take a look at that. And you also have some of those out there that have kind of operational or balance sheet exposure, such as a MicroStrategy, which I think has effectively become a Bitcoin ETF.
We looked at it yesterday. It's really trades. What else does that company do? It trades at its Bitcoin.
It almost trades at value.
It trades at Bitcoin. It trades at cost.
Yeah, it's interesting. You have this free cash flow that it generates, and then they just pump it right into Bitcoin. Really kind of betting the farm, I suppose, or the whole company on this. We'll see what happens. But that said, I've done a little bit of research here. Just going through the platform and trying to pull some data out. So just to take a look at some of these correlations to provide a little bit of a backdrop, to start with, we'll look at these companies that have that operational or balance sheet exposure. So the biggest one that comes to mind, the first one I think that comes to mind for everybody is Coinbase. Typically very correlated, and I haven't rank that correlation. I think it's important sometimes to put context around the strength of these correlations. And 0.45 is really off of the highs. Quite often we see a much stronger correlation with Coinbase, as you would expect. That's come in a little bit. Square or Block and also PayPal that have crypto exposure or crypto as part of their business, really not correlated at all. And you can see those stocks are down quite a bit there. But I think what is interesting here is that for as volatile as people might perceive crypto assets to be, these underlying equities are much more volatile on both, the downside and the upside. So if you're bullish, quite often you can really outperform the price of Bitcoin by buying one of these proxies. And it's not a perfect correlation, but MicroStrategy is certainly up a lot more than Bitcoin is over the last since year to date.
Yeah, I wasn't just because it kind of got below, like it was trading at a discount. Wasn't it like wasn't it pretty much discounted to last year?
A lot of stocks trade under discounted prices.
No, I know, but I thought it was
the
discounted
assets.
to like the value of their. I forgot the we don't trade MicroStrategy that much, so I wasn't exactly sure, but I thought they closed the year like undervalued, relatively undervalued.
Let me take a look at it.
I don't remember the details. I remember reading about it somewhere, but whatever.
I know in terms of where you've seen significant discounts, you've seen in the Grayscale Trust, where there's been a discount to the net asset value. And that has come in a little bit as there's now the view that maybe this will ultimately be converted into an ETF. We'll see what happens. But MicroStrategy, for the most part, has kind of just tracked the price of Bitcoin. I mean, it was getting slammed down into the beginning of the year. So that was really the low point when I look at the chart here, about 130 or so.
Got it.
And has rallied quite a bit.
Got it.
So just to set the stage, those are some of the ways that you can get exposure, but we've seen some of those correlations break down here recently. And I think when you look at the correlation of Bitcoin versus the S&P 500, it's really been at one of the lowest points in the last few years. So that correlation is broke down between some of these equities that give you that exposure. That said, if we jump to the next slide, there are thematic ETFs that will also give you exposure to crypto. One of those is the ARK Next Generation Internet ETF. So there's some crypto companies in there. Primarily, it's Coinbase again. You have the Bitcoin Futures ETF. You have BitQ, which is going to give you exposure to some of those same companies that are in ARKW, but you'll also get a lot of miners in there. You have things like Galaxy Digital as well. And then you have WGMI, which in crypto stands for We're Gonna Make It.
No, it doesn't. Does it really?
No. Is it true?
Yeah, absolutely.
Oh, no.
This is a fun space.
Yeah, I
think
agree.
so,
It's
at
a fun
least.
space.
Yeah. But you could see a little bit of a stronger correlation when you get into those companies that are really directly going to benefit from the price, specifically miners there. And obviously the futures are strong, positive correlation, not perfectly correlated, but compared to Bitcoin, again, it's really, as you would imagine, those small cap companies that are going to be more volatile, you just get a bit more upside bang for your buck, especially when you look at the miners here, up 100% versus, roughly that 50% year to date for crypto. Still relatively low vol when you look at these IB ranks in here, which is something that stands out. If we jump to the next slide, I want to take a look at some of the publicly traded Bitcoin mining companies, and then from here we'll pull out a couple that I think are interesting, and take a look at a couple trade ideas. So there are a handful of, I suppose, liquid mining stocks here. Riot and Marathon are the most liquid by far. If you look at the options in there, a couple of pennies wide, 5 cents wide maybe. Iris and CleanSpark, well, they give you the opportunity for some significant upside when you look at the year-to-date performance here, very volatile. Options aren't that liquid in there, and there's a low-price stock. So
we have never traded either one of those two.
No.
Yeah.
Okay. Have you guys ever traded Riot or Marathon?
Sure.
Okay.
Both of those, and we haven't traded them in a while, but we've had some pretty. I don't know where they were trading. They were like around $10 last time I looked, but I'm not sure where they're right now.
Yeah, they've fallen quite a bit. I mean, Marathon specifically is down. They just did an early conversion or negotiated a conversion on some of their convertible debt, which has been able to wipe out about 50% of their long-term debt. But given the the issuance of
they're
of
$8
shares,
and $9.
Yeah,
Last time
it's
I looked,
been-
they were a little bit higher, but we have no position on it either right now.
Okay.
The other ones, no, we never traded them. CLSK, no.
So again, the theme being here that if you want more volatility than what spot Bitcoin or some of the futures exposure will give you, you can certainly get that through the miners. And that theme in most of these, at least at this point, has been pretty low volatility. Even though when you look at the IV index in here, you're still looking at something that has 100% vol, well off of those highs though, just given how much these can move to the upside when you do see some moves in the market. So that said, I want to pull out a couple of these that have some liquidity and talk about two trade ideas. I'll run them past you. Let me know what you
Let's
think.
go.
So the three that we're looking at here on the next slide: Riot, MicroStrategy, and Marathon. Again, some of the same data that we had up here, but also wanted to look at the realized volatility in here and just see how much
What's
of a
the premium discount? What is
So,
that?
What I'm looking at here is what is that implied volatility premium, or in some cases, every once in a while, where is that discount, where implied is actually trading cheap to realized vol, just as a way to put kind of further context
okay, so
around
that's what
it.
you mean by that. Okay,
Yeah,
got it.
so
No, it had nothing to do with the coins themselves.
No,
or
no,
anything.
no. So you're just
no.
talking about volatility.
yeah, sometimes I think when you get into that, and would really curious to hear your guys' thoughts on this as well, but when you have that period of time where you have very low vol, everything kind of being relative, I like to look at, well, yes, implied vol is relative, it's low relative to itself, but where is it versus what the underlying price is actually doing on a monthly basis?
Yep, got it.
And then you can rank that too, where you have a significant premium. Where is that relative to how wide that spread has been over time? And we're not at the widest, but when you look at Riot, for example, and you have an implied vol of 96, it's low relative to itself, but it's a 42% spread against what the stock has actually done in the past. It's not predictive, obviously, of what's going to
Yeah,
happen.
Tasty's not. We don't. That's what's weird to us. We just don't look at any kind of historical vol.
Okay.
It's not part of what we look at when we think about discount, premium discount, that kind of stuff. But it's fine. Like we would look at IV rank, whatever. But you know how that works.
Oh, absolutely. I just think if you see where, okay, this is the widest that implied vol has ever traded over realized vol, maybe there is something that even adds to that implied volatility, IV rank metric there. So just kind of throwing that out there because I think it's interesting. I like to look at it. But of those three, I think there could be some potential trade ideas here, or I have some ideas, potentially some trades in both Riot and Marathon. And if we jump to the next slide, here are the trades, guys, and these haven't really moved from yesterday. So
Okay.
I'm looking at a couple ways to, if in fact you are bullish, so these are both bullish positions here in terms of your view, but buying the Marathon 810 call spread in October. You could do that around 55 cents right now, so it's a 2-point wide spread. So you're risking $54 what you pay for it versus the 146 potential reward if obviously the stock price is
Let's
above.
see what their volumes. Do any volumes? Kind of crappy. Yeah, we would do November
Okay.
just
Okay.
because but it's the same thing. It's 62 cents. What's the stock doing today? It's up dime.
It's up
62
13
cents.
right?
So
Okay.
the reason I didn't go into November was because you do have earnings on the 14th. I don't know if that changes how you
No, that
think about it
doesn't
all.
change anything.
Okay. Well, you could do this obviously in November as well, but that was one way that I was kind of looking at it. If you wanted to put on a bullish position here, is just buying that call spread, have a return on capital if you get the full value there of 170% relative to what you're purchasing it for. Then the other one that I thought was kind of interesting, just given where the price is, it obviously can continue to move lower, but maybe you get a little bit of a bounce in both of these miners. But also looking at Riot and looking at selling the 10 strike October covered call in here. So the stock price right now is about $9, so it'd be $900 to buy 100 shares. You're risking $850 if you're able to sell that 10 call for about 50 cents, and your reward to the upside there then is $150. The spread between the price of the stock and the strike, and then that premium that you receive of 50 cents, so you have a return on capital of about 17% versus the outright the cash allocation, I suppose, of buying the stock. Obviously, if you do that on margin, your return on capital is going to be a lot higher. But if you have a cash account, it's going to be 17%. So, a couple ways
Yeah,
based
not bad over
on.
the next 20-ish days if you're bullish on the stock, right?
Yeah,
You got to be
right.
bullish on the stock.
Got to be bullish on the miners here. They've been slammed down over the last month. Vol in there is pretty low relative to if you just look at that monthly range. We're not pricing in, a 50% move like we've seen here in some of these to the downside. But yeah, a couple ways that you can get exposure here. Wanted to try to make this a little bit more actionable than some of the prior shows and throw some trade ideas out there in the miners.
Good job out of you.
Trying to get a fill.
In which one?
I like the covered call.
Okay.
It's closer to 860-ish.
Okay.
Which one?
It's closer to $8.60.
No, I like it in
8.50.
November.
Oh,
I like it in November. I like it in November, but
no, November is more like 820-ish or something.
yeah. I'm trying to. Yeah, we'll see if we get filled. All right, no problemo. All right, done on the covered call.
Beautiful.
So I bought the stock and
Sold the calls.
sold the calls. Sold the 10 calls.
That's correct.
I did it really horrible. Like, I legged it crappy because I thought that whatever, I'm done.
So what do you look for with a covered call in terms of return? I know we typically manage at
I don't
50%.
usually. I look for so the return's irrelevant. What I look for in a covered call is low basis, high implied volatility. Unfortunately, in Riot right now, you do not have high implied volatility, so I don't love the trade. Is
Yeah,
the
low
basis is the basis low? I mean, yeah, the stock was recently about 18, 19?
Mm-hmm.
Yeah, so the stock's been straight down. So you have low basis, but you don't have high implied volatility. So that's the only bad thing.
Yeah.
But it's a crappy $9 stock. Is
Not a $90 stock. It's a
Yeah.
$9 stock.
exactly.
I guess what I mean is, where would you look to take profits? Let's say you do get a short-term bounce here over the next week or so, and because this can move quite a bit.
So the easiest way to do covered calls is, well, first of all, I do November because I'm already out of October as of tomorrow.
Okay.
So the simplest way to trade covered calls and the easiest approach that Tony and I use is whatever your strike is, when the strike is breached, you basically made your profits.
Good to go.
Like it's a long delta position. We're buying the stock at $9.17 or whatever.
Mm-hmm.
If the stock trades $10, that's almost a 10% move in the stock. You're done.
Yeah.
Yeah, and you've broken your strike. You take your profits. You move on to the next trade. If you still want to be long, you turn around and sell the out of the money put, the 9 or the 10 put.
You get higher profit.
But for the
less
most part,
reward.
the mistake that people make with cover calls is they try to maximize everything down to like, I can still make another 23 cents.
Yeah, they stay in it
What
way
we
too
do
long.
is really simple. If you're buying stock at $9 and you're selling 10 calls, if the stock trades at 10, you just get out.
Okay.
Yep.
I mean, if you're looking for a spot to get out, you always get out when the strike is breached.
So you wouldn't roll or anything where, let's
No.
just say, because this
No.
could move pretty quickly,
No.
right? I mean, you
Yeah,
could
yeah.
get $10 in a week
Yeah, listen,
easily.
this has what's the vol here? It's got to be,
Riot?
it's 100.
Yep.
Yeah, so you just, it's with $100, you move $1 in an hour.
$1.40 expected move for October. It's almost a little over $2
Yeah.
for November.
Yeah.
Well, good luck. I hope I don't take you down here in Riot.
I don't think a $9 stock can take it down. I've tried with higher price stocks. It
I
doesn't
don't
work.
think you're going to take us down. We have a lot of other positions that are on the verge of taking us down. Not really taking us down, but a lot of other positions that are not doing very well. You are not going to hurt us with this Riot
It's good
trade.
to know we're safe then. Yeah.
We have made some money in Riot and Mara in the last 2 years. But we've never traded MicroStrategy. But honestly, when it comes to Bitcoin, when it comes to digital assets. Oh wow!
Bonds 113. How was that?
took
50%?
No, I'm flat on the day.
Oh, beautiful.
I think. Yeah, I'm flat. on the
Probably
day.
are. I'm counting.
Yeah, we scalped some bonds today, pretty good. All
Nice.
things considered. I mean, considering we're flat on the day,
Beautiful.
but we haven't changed our position coming in. But I guess, which was a lot of work to make a few freaking little crappy ticks.
The life of a trader, Thomas.
Yeah.
Are you trading 30s, 10s? What are you trading in bonds?
30s.
Okay.
When we trade bonds, we trade 30s.
Okay.
So we trade ZB. When we do pairs trades, like we have the steepener on, the yield curve steepener, we're trading twos 10s.
Okay.
But that trade today is huge our way. We've had the biggest move in the 210s that we've had in a long time. Tony, that's about as pretty as
as it can be.
Yeah, we're finally up money on this trade. Mm-hmm. We'll take a little of the 2s 10s off, actually.
There's my man. That's what I wanted to hear.
So we'll take a little bit of it off.
You can do a little bit of your NASDAQ Russell too, just for just for the folks at home, for the people that are watching on the small screen,
For the little people?
for the little people, for the Johnnies, for the peeps, for my peeps.
Yeah.
Show them how to ring the register.
When you look at,
Because if you get a market reversal, if history repeats itself, you will be losing money on this again. Because it did not work on the way up, and it has worked wonderfully on the way down.
You're the best, Jerry.
I'm just showing the obvious.
Anyway, hang on 1 second. Ryan, just 1 second. We'll take a little bit
What
of this.
percentage of the 2s 10s did you just get out of?
A 50.
Beautiful.
It's just time to take a little bit off here. Done. Okay. So just took off a little bit of that steepener trade.
I think he's just trying to show off in front of you. I think that's what.
No. We've had this trade on.
I'm
We've
impressed.
literally had this trade on for months, and it's finally going our way. Probably not where it was worthwhile, but at least we did this thing like everywhere from 60, 70, 80, 90, and 100 basis points under.
yeah,
And it's probably trading right now, we're about 50 under.
Yeah,
So this is the first time we've been profitable on every single one we put in.
maybe even less than that. Maybe
Yeah,
like
so
40
this is the
some
first
odd.
time we've held it like long enough to be profitable on every level that we put it in.
Mm-hmm.
On the other one, on the Russell Nasdaq, I don't think we're profitable on every level, Tony.
No, not yet. That's moved a little bit more.
Yeah.
But
do you guys think people should be concerned given how inverted we've seen the curve go?
Concerned in what sense?
Just in the sense that, obviously the timing is difficult here, but it's a pretty good predictor of, what the economic outlook or, the recession that might transpire.
First of all, when we think about bonds, we don't think about anything macro.
Okay.
Like, it's not our thing. So we're just looking at it, hey, based on, should bond volatility be higher than gold volatility? Should bond volatility be higher than almost as high as S&P volatility? At what point do we think that, the opportunity has given us like what we would consider really strong pot odds? We'll look at crypto the same way.
Yeah.
And unfortunately for crypto right now, just the volatility is too low and the price has stayed relatively high. So it's hard to get people excited about it. Like I would, with crypto, I'd want one of two things to happen. I'd either like see the price lower and volatility higher, or the price higher and volatility higher. Just to have something to,
Absolutely.
something to trade off of. We haven't seen that yet. But in the bond market, we've actually seen it. We've seen like crazy extremes in price. I think you're going to get we're hoping for at least a decent bounce here soon. And then in the stock market, I think kind of the same thing with some of these, the Russell versus NASDAQ, the Dow versus the Dow versus NASDAQ, the S&Ps versus the Russell, all this kind of stuff. These are pretty good extremes, and same as 2s, 10s, and 30s. So like we've done pretty well with our pairs trades, and it's kept our trading, going.
That's
very
awesome.
good, very good. Awesome. Good job out of you.
Cool. Thanks, guys. Thanks for
Awesome,
having me.
man. Yeah, trade ideas. We love it. We'll be back in 90 seconds. Even the S&P is up 5, NASDAQ up 11, Russell up 8, and Dow up 27. We'll be back in 90 seconds. We have more Tasty Live with a market measure next.
Yes, thank you.